another Stocks for Teens video. Today we're going to be covering topics in a different way, but before that, as always, I have another stock quote, this time from Warren Buffett. Warren Buffett once said, "Risk comes from not knowing what you're trying to accomplish." And what he says is very much true. If you know what you're trying to accomplish, then any risk you might be taking will have a higher payoff than just randomly selecting a stock in the market in hopes of making a profit. This is why always do your research and use my videos to help you in your research. Now, as I've mentioned before, we're going to be doing things in a different way. In my past videos, I've been covering the fundamentals of what you need to know in the markets, but now we're going to put everything that we've learned into use, which is through stock analysis. Yes, today we're going to be analyzing a stock, and what better way to start off than with an Apple stock? Today we're going to be doing a stock analysis on Apple, so let's get started. Before we get started on analysis, let's have an introduction to Apple, even though I'm sure most of you know what Apple is. Apple in the Nasdaq stock market goes by the stock symbol AAPL. It's an American multinational corporation that designs and manufactures popular consumer electronics and software products, and because of this, they lie in the technology sector, along with other popular companies such as Microsoft. Apple's key business comes from the specialized products they make, such as the iPhone, the Mac, the iPod, Apple TV, and the software they develop for their own operating systems to run on. As expected, Apple has a large market cap of $1.079 trillion US, which shows that Apple is a well-developed and mature company. In fact, it's the largest tech company globally, which is why we all love Apple. Now on to Apple's financial ratios. To start off, Apple has a large revenue of $274.5 billion US. This is important because a business must bring in money to turn a profit. Apple doesn't need to worry about its revenue because it's so high, but for companies like startups that have yet to turn a profit, revenue can sometimes serve as an indicator of potential profitability in the future. Anyway, moving on to Apple's profit after tax readings, the PAT for Apple is $12.6 billion for the quarter that ended on September 26, 2020. Now here's a website that shows all of Apple's PATs since they first started. Since Apple's first financial quarter ended on June 28 of 2008, Apple's net operating profit after tax, or NOPAT, has increased from $988 million to about $12.6 billion as of the quarter that ended on September 26, 2020. You can see that Apple has had many fluctuations, but they've had a steady incline, but in the last recent years, they've been on a downwards trend. Now, why is PAT important? A high after-tax profit margin generally indicates that a company runs efficiently, providing more value in the forms of profits to shareholders. After all, we're the ones receiving the profits that companies choose to put out in the forms of dividends. Apple has a high PAT compared to the industrial average, which shows that Apple is faring far better than most technological companies. Apple has an earnings per share of $3.29 US during the end of Apple's fiscal year. Now, this website has all of Apple's annual earnings per shares, and we can see that Apple's earnings per share has been on a steady incline ever since the company entered the stock market, and now it has a very high EPS of $3.29 US. A higher EPS indicates greater value because investors will pay more for a company's shares if they think that the company has higher profits relative to its share price. This shows that Apple stocks are extremely valued by investors, as they should rightfully be, as investors pay more for Apple stocks in the market. Now, there are other important financial ratios to look at for an investor to get a comprehensive understanding of any stock, in this case, an Apple stock. One of the more important ones being the PE ratio. The PE ratio, or the price to earnings ratio, relates a company's share price to its earnings per share. The PE ratio is important because it provides a measuring stick for comparing whether a stock is overvalued or undervalued. If you need more help in understanding what a PE ratio is, then go check out my fundamental analysis video where I cover some of the most important financial ratios that fundamental analysts use. Relating to Apple, Apple has a PE ratio of 35.59 as of November 26, 2020. Apple's PE ratio is higher than the industrial average, which shows that investors are willing to pay a higher share price today because of growth expectations in the future. Apple stock, therefore, is overvalued. The return on equity, which measures the profitability of a corporation in relation to stockholders' equity, is also crucial for Apple's stock analysis. In this case, Apple has an ROE value of 73.7%. which indicates that it should be factory for investors to invest in the stock, as the baseline for investment is anything over 14%. If stocks' ROEs are lower than 14%, then investors aren't gaining much profit from the stock itself. However, even if Apple's ROE still might be considered as high for the industrial average, we still need to consider intra-company growth, or how much the company's ROE grew over time relative to its previous ROE. For that, we need to go to a different website to explore. Here, we're on finbox.com, which explores not just the ROE, but many other financial ratios of companies and their stocks on the stock market. Again, I've posted the website link on the slide itself, so if you want to visit this website anytime soon, then it's on my slide presentation. As we can see, Apple's ROE is much greater than its previous record in 2018. You can see that because it's increasing on this particular graph, which shows that equity should be no problem for Apple's investors. Now going back, the debt-to-equity ratio compares a company's total liabilities to its shareholders' equity and can be used to evaluate how much leverage a company is using. Higher leverage ratios tend to indicate a company or stock with higher risk to shareholders. Apple has a pretty high debt-to-equity ratio of 112%, and it jumped up 50% from 2016, which might be a bit alarming for investors, as Apple might serve as a higher risk company with more leverage on its investors. Moving forward, Apple's net cash flow, or the difference between the money coming in, which are profits, and the money coming out, which are liabilities or costs, is positive, which is great for starters. This is because if the net cash flow is negative, then companies are losing money to liabilities more than gaining profits, indicating signs of potential bankruptcy. Apple's net cash flow is $80,674, which is up 16.26% from 2019. Apple's ROA, on the other turn, which stands for return on assets, has declined from 2012, which shows that the company might have overinvested in its assets and might have experienced fluctuations with those assets, with those investments in the assets. If we go to this website here, we can see the fluctuations in Apple's ROA. So right now I'm on macrotrends.net, which is also another website where you can find financial ratios and graphs related to financial ratios of companies and their stocks. As always, I've posted the website link in my presentation, so if you'd like to take a look, then by all means, go ahead. As we can see here, we can see that there's a steady decline as Apple reached its peak for its ROA in 2012. Of course, there's a steady incline, a very small incline from 2018, but still there was a major decline from 2012. This might indicate that there are bad investments being made by Apple because Apple might be overinvesting in assets that might be declining in its worth. Now that we're officially done covering Apple's financial ratios, it's time to look at Apple's shareholding pattern, which might be the shortest section, but the most important as it relates to the herd mentality of Apple stock investors. Institutional investors hold a majority ownership of Apple through the 59.27% of the outstanding shares that they control. This interest is also higher than at almost any other company in the telecommunications equipment industry. This pie chart right here shows the divisions that each branch of investors have over Apple's outstanding shares. These percentages all add up to 59.27%, but we can clearly see that the other institutional investors, or companies and organizations that invest on behalf of their client, take up the majority of investments at about 30.53%. To wrap things up, we're finally going to be performing an overall SWOT analysis on Apple stocks. SWOT stands for strengths, weaknesses, opportunities, and threats. So this will really be a holistic observation and a key part in determining why or why not you should proceed with making an Apple stock investment. The strengths of Apple include a strong brand image, high profit margins, and effective rapid innovation processes, which makes sense because Apple's reach is global and popular, and they keep releasing new products, to keep a steady connection with their customers. However, weaknesses include limited distribution network or a very selective distribution, high selling prices, and dependence of sales on high-end market segments. This is a problem because even though everyone knows about Apple's products, only a handful of individuals can really buy Apple's products because of their high prices, which might affect Apple's income and profits for their shareholders. Opportunities that investors can look forward to are expansion of the distribution network, higher sales volumes based on rising demand, and development of new product lines, while threats that we all have to be aware of are aggressive competition, imitation of their products by others, and rising labor costs in various countries. Overall, Apple has been one of the best stocks in the market in the past 20 years. Buying opportunities have been repeatedly created every time investors start to doubt the company's growth and innovation, and because of this, Apple stocks are a generally reliable stock for shareholders. As always, thank you so much for watching. Your support makes this channel grow, so don't forget to like this video, hit that subscribe button, and share this video with others who might need help on analyzing stocks in the market. Finally, if you have any comments, questions, suggestions, or anything to say for this channel, then leave it down in the comment section, and see you next time.